Go ahead, Jimmy.
All right. Hi, guys. Well, welcome to our Tuesday night, where we talk about the good, the bad, and the ugly truth about multifamily and real estate. And we're super excited to have our amazing speaker tonight, Stephen, and someone who has a lot of experience. So he started in 2017, and until today, he have 1,800 units. I mean, I'm pretty sure a lot of us here, we want to have that kind of success and that kind of experience. So that's why we invite our friends and family who have experience like Stephen tonight, gonna help us and educate us. So how are you doing, Stephen?
I'm doing well. I'm excited to be here. Kind of as I was just saying a moment ago, when it doesn't get easier, but I'm doing good, man. Life is definitely throwing stuff my way, but I'm good. I'm excited. I'm glad to be here. I'm happy to share what I can with your audience today.
Oh, I'm so absolutely, man. We have all kind of basically audience tonight here. We have people that just getting started just yesterday, and we have people that started like this year, last year, and some experienced investor in the call as well.
Can we
But
get can
just
we get a sense of the audience really quick? So everybody who's on right now, we got a pretty good group. If you're new to multifamily, can you put new in the chat? And let me know, how, if you're passive investing or if you're being a GP. So if you've been a GP, you can put GP. But I want to get a sense, where are you guys at in your journey? So we got Jessica's new. Who else is new? Uh, Irma's new. Lorenzo's new. Cynthia's new. All right, so we got Byron, passive, passive, passive. Perfect. Okay. And then here's my next question, new to multi. How many of you that are on the call, how many of you want to get into multi? How many want to be your own GP at some point, right? You want to be part of a sponsorship group. Can you guys put, just put, GP, like I want to be a GP. GP, Byron, if you want to be a GP, Jake, GP, Willie. I should see everybody's hand going up right now. That's probably why you're on this call. Lorenzo, co-GP, perfect, right? So you guys all want to get into deals. I think you're in the right spot tonight. But that helps us know really where to put the conversation, because some people are brand new, right? And you don't even know where to start. And some people are further along, and you got different obstacles. Um, so Jimmy, thanks for letting me ask that question. I just need to get a better sense for where everybody's at in the audience and where we can help them get unstuck and speed up their journey a little bit.
yes, 100%, Stephen. Well, thanks for doing that. I think this as you can see, we have a very wide range of experience here. So love to hear from you. But let's just get start off, Stephen. I mean, for those who don't never heard about you, never seen you before, can you just give a sense, a little bit about your story, your background? Who is Stephen?
Sure, I'll give you the bumper sticker version because there's been a lot of things that have transpired along the way. But um, I like most people, you start making some money, and I don't always want to work, and I want to diversify. So what do? Well, I'll go into real estate. Um, I looked into doing flipping houses, right? So my wife and I bought this old house, about 100 years old. It had been a rental for a while, and we started flipping it, right? We're going to do the house hacking. We'll live in it and flip it. And it was a nightmare. Um, my wife we had one kid, 3-year-old, and my wife was pregnant. Couldn't find the contractors to get the work done. We're living in a halfway completed house, and it was a nightmare. Like, there's no way. Like I can't continue to do this, not scalable. And then when I did the math on it, like how many single family homes am I going to have to own, right? To like replace my W-2 income. And then fast forward, well, then you see multifamily, you have your economies of scale there. So, that was all kind of happening. And so I joined a program and very quickly realized it's a ton of work. And there was some guidance, there was some coaching there. They show you how to underwrite a deal, the end. And kind of the rest of it's up to you. And because I was starting a family, I had to go the passive route, which worked out really good, right? I was changing diapers and getting mailbox money. It was great. I loved it. So once things settled down, and I wasn't changing diapers, and I'm like, okay, well, I need to shift gears and let me get into the multifamily space. And even then, okay, well, now I've got a little bit more time. It was still not easy. There was so much I didn't know. And I was underwriting deals, but that's kind of where it ended. I didn't really know well what the other roles were. And here's what changed for me, and this is where I got most of my traction and success, is I got an outside coach, a business coach. And that's where like my mindset really shifted, where I had been looking at it so long for I want to be an investor. Well, if you think about it, like we all like we have our job and we start investing, right? Almost everybody starts investing passive in a 401k or something, right? And so I just want to be an investor. I wasn't looking at it as a business. And that's what you're doing. You're buying and selling businesses, right? And once I started to look at it as a business and I acted more like an entrepreneur, it started magically making sense to me. And that was like, I mean, I made the decision to go into multifamily, but when I started looking at it different and I actually started acting like a CEO, not an investor, but I started acting like a business owner, everything starts falling into place, right? Everything starts falling into place. I build a team, I get partners, I build processes, you know, focus on scalability. That's where everything shifted for me. So in a nutshell, that's kind of how it worked out for me. And that's where I'm at today.
That's awesome. That's awesome. So, you know, I feel like there's a bit of misconception, right? Everyone is trying to buy the next multifamily property, get into multifamily, and I feel like they believe I buy, 1,000 units and then I'm good. I won't do any more work. I just get the mailbox money, right?
Mhm.
And here we have you've been investing since 2017, 1,800 doors. What was it about just that shift or just taking a look at it from a different lens that kind of just opened it up? So I feel like a lot of us go into just multifamily and don't
Uh-huh.
truly realize that we're actually buying a business.
Yeah, lots of failures to get me to that point, you know, to where I'm just looking at it the wrong way. You know, I would go to these multifamily events. How many of you have been to a multifamily event? Can we get like people raising hands? You've been to some type of multifamily event? All right, I see hands raised. When you go to those events, common questions, these things I hear, you can raise your hands, nod your head, you know, yes or no, but you go to these events, how many doors have you invested in, right? That's a common question. Are you a passive investor? Are you a deal sponsor? That's a common question. And what we don't hear are questions like, what was your revenue last year, right? You know, what types of marketing campaigns are you doing? You know, what is the most effective lead generation for you? Like you don't those conversations don't come up, but it is very focused on the investing parts. I'm not saying there's anything wrong with that. But here's what happened is I was going to those events for years and I looked around, I was like, man, there's some people who are crushing it. What's missing for me? Like, what is that thing that's missing for me? And I was scared to get shoulder to shoulder with these people. And once I got past that, you know, once I'm like, okay, I need to act more like them. I need to rub shoulders with these people. That's what they were doing. The people that I saw come into the space that were most successful, they had real world business experience. And so that was like, you know, another aha moment for me. I was like, ah, okay, all right. So paradigm shift. Let's look at it from a different perspective. And that's probably really what it was when I just took a step back. Why are these other people so successful? What's different about them versus here I am underwriting deal after deal after deal? Like, yeah, I can underwrite deals, but you know, where do I add value? And then once I have a deal, like you said, even if you get 1,000 doors, there's still a lot of work. And when you start putting those processes in place, it becomes a lot easier. So that was really it. Just I had to understand, I had to take a step back and look at it and just really understand like there's a difference, like success leaves clues. What are those successful people doing? I just had to rip that band-aid off and talk to them.
That's awesome, Stephen. So if you can help us take us back to the point that you decided to go to multifamily, and obviously you started in 17, so it's been a few years that you've been doing this. So if you're going back to like the very first deal for you when it comes to
Mm-hmm.
multifamily, what was it look like for you? What was the challenges? And then if you have to look at your business in phases, right, from where the challenge from the first one until to now, you're building team, you're building processes. what will be those phases look like for you?
What would the basis look like for me? Like, what would I, if I could tell my younger self, like, do these things first?
Yeah, like if you could divide it by like the first phase where new, when you have all these challenges, and then the middle part when you're confused, you're figuring things out, and until now you already figured out a process and system in place,
Yeah.
and you bucket that away.
So when you first get into it, you don't know shit. That's that's just what happens, right? And it's really scary and you're overwhelmed. But just stick with it. Like that's my biggest advice, stick with it. You have to get through that learning curve. And then you're gonna show up and you'll be like, oh, I've met that person, I've talked to that person. Then you get more comfortable. So when I first started, I more organically started passive investing, but I highly recommend it. I highly recommend jump into a deal passively first. You're gonna learn a lot. You're also, if you want the opportunity to invest, to maybe be a co-GP. I saw some of the people say they want to be a co-GP. Talk to that person that you're going to invest with and tell them, hey, this is what I did. This is straight up, right? I went to someone, I said, hey, I'd like to be a partner with you at some point in the future. If I invest in your deal, would you be open to having more conversations? And they said, yeah, we could do that, right? Because the answer is always no if you don't ask. So phase one is you don't know shit and you've got to get your foot in the door. Like you've got to start building those relationships. So show up, be consistent. You get into a deal. Phase two, if you don't know shit, right? I'm sorry for all the language, but what happens is you get into a deal, you underwrite a deal, and then the real work happens. Then you're like, oh, now I have to figure out asset management. And it's the people that you surround yourself with. It's the team of GPs. They are going to help you survive and make the deal successful. Because you need to lean on their experience. So you in phase one, you're going to want to find people that you think you can work with because you're going to get into a deal and then you're going to be married to them for 3 to 5 years. And when things go bad, you want to be with people who are going to step up. And then after that, you start to be like, this phase three is okay. I've been there. I've done that. And even if you don't see the exact problem that you've seen before, you've had something similar to it. And so it takes a while. It takes a while. And those are probably my three phases is the very beginning. You don't know anything. Start as a passive investor, but start having those conversations. You get into your first deal. You still don't know as much as you think you do. Find good partners that you can work with and that will teach you along the way. And then it starts to get a little bit easier, but I would say it's probably a couple of years as a general partner of, running a deal in the asset management arena, at least for me, where you start getting comfortable. And then from there, you kind of wash, rinse, and repeat.
Stephen, what would you say what would be the top skills or things that you learned, from phase one into phase two? We have a lot of people here who want to be GP or just getting started. What would you share with them?
The most common theme, I think, in all of it is mindset. And I mentioned that before. It's not easy. It's the hard path. It is the harder path. It's easier to show up to work and just take orders. It is. I'm not gonna lie, right? It's easier when somebody else is taking on the responsibility. You just got to show up, for a paycheck. That is easier, and there's nothing wrong with that. If you choose this path and you're really gonna do it, you have to work on your mindset. You My advice is focus on the journey and not the destination. Hold on, did my audio change? Okay, I'm good. Focus on the journey and not the destination. It took me a long time to figure that out because it's like, man, I want to get into my first deal. And you get into your first deal and the excitement and the buzz wears off from that, but you're constantly hit with new challenges. Fires at a property, people sleeping underneath the foundations of your property, theft at properties, vandalism. Like it is not an easy thing. So I think mindset and being consistent, like show up, be consistent, show up, be consistent, um, and get out of your comfort zone. Really like be okay with getting out of your comfort zone because I have to do it every day. every day. Like you're focused on that growth. And when you learn to like focus on the journey, like, hey, this is going to be challenging. It's not going to be easy. It makes it a lot easier, as funny as that sounds. And then the second thing I would say, and I'll go back to it, is you're gonna get into a relationship with these people that you're gonna, do a deal with, right? As syndicators, you're gonna have other partners. Um, Take the time. It's kind of like I joke, but it's kind of like speed dating, right? You show up to these events and you meet these people and you exchange cards and you're like, oh, that person's cool. And would you like to deal with me? But go to dinner with some potential partners, schedule phone calls with them. Because like I said, you're gonna be hanging out with them for quite a while. So focus on mindset and relationships at first. I mean, there's a whole plethora of things you can focus on, but I think the core is mindset and relationships, because the people you surround yourself with will make or break you. And then your mindset will make or break you.
I love how you talk about the mindset, Stephen, because a lot of people, when they come to this business, they thought that it's gonna be easy, right? It's
Mm-hmm.
gonna be you underwrite 5 deals, you have like 4 deals closed, and then and after five months and they don't get anything, they start wearing down and kind of demotivated and just feeling like they're not moving ahead. Have you ever come to that point that you're so frustrated because you're not getting the results that you want, after a
Mm-hmm.
period of time? And what helped you, right? What grow your mindset and what's the changing for you?
Man, you guys are asking deep questions here. So let's talk about 2023. 2023 was a really bad year to get started in multifamily. How many people in here got started in 2023 in multifamily? Okay, so Willie did. You can put 2023 or a thumbs up or raise your hand. If you got started in 2023 thinking that you were going to be the next Grant Cardone, you got like smacked in the face and kicked to the curb. 2023 was hard because the market's just like coming down. So in 2023, when the last deal I bought was in 2022 at the peak of the market. And literally as we were closing, interest rates were rising. I mean, it was that moment in time. And so I'm about 2 years into that on the last deal, and I haven't got a deal since. And that's okay, right? Because there's other other areas of the business that I can focus on. But so like 2023 has been a rough year. It has not been easy. What got me through it? Mindset got me through it. But here's what I did is I hired people because I know that on the other side of all of this like heartache is opportunity. And so what I did and my partners did is we focused on improving our processes. We focused on building relationships. We basically focused on, as soon as the market shifts, we want to be in a good spot to just get after it. So it's a long game. And that's probably the thing I learned, is that, when it comes to real estate, especially, it's in cycles. But I also have learned that, there have been times I've been working on something. I didn't see the results I wanted to, and I just wanted to throw in the towel. Like, I'm done, man. Like, let's just be done. But I've learned that it's accumulation of those small steps that leads to the results. So if it where you lose the game, where you lose the game is right here. If you don't give up, you're not going to fail. That's probably my biggest advice. If you don't give up, you're not going to fail. So I mean, 2023 was that all for me. And things are changing at this moment, right? The wheels are coming off a lot of things. I'm actively having conversations with brokers that I've built relationships with. I've got a full-time employee that underwrites deals, and we're going after deals right now. So it's where there's challenges, turn that into an opportunity. That's what I do these days.
That's awesome. You know, I feel obviously 2023 was a difficult time, and you know, do see a lot of people that started off strong and then, like Jimmy mentioned, just kind of fall off and nowhere to be seen, right? So, you're talking about focusing on the business, the processes, right? what is it that you learned, or that maybe rub shoulders with someone that taught you to kind of think this way, to, hey, let's maybe take a step back in where we are in the market and just start making things more efficient?
Um, you said what did I learn from the people that I was surrounded with that
Yes.
taught me to think that way? So I had about probably about 2.5, 3 years ago is when I had that aha moment of like, I need an entrepreneurial coach. I need a business coach, a high performance coach. Um, and so I'd spent a lot of time working on my mindset with that person. And then through my relationships had built strategic partnerships, with people who have been doing it for 10 plus years. And when we put our heads together and we looked at the problem, we thought, yeah, we can think that this sucks, or the other way we looked at it was, okay, let's look at, I'll go back to, we look at the cycles, right? It's just a cycle. Does it suck? Absolutely. But it's a cycle. So then let's set ourselves up as best we can. So it was a partner who has 12 years of experience and has invested in over 4,000 units as a partner to reflect with. And then also, I had built a good relationship with an entrepreneurial coach who helped also, with a lot of that framework and that structure as far as doing that. So I'll go back, when you surround yourself with the right people, you look at things differently, right? You can easily say, oh man, this is crap, I need to go into something else, or you can stick with it and figure out how to, turn the problems into opportunities.
Man, I love it, Steven. Man, whatever you coming out from the way that you speak is just dropping bombs, right? Every
Oh,
single
well,
every
I
single minute.
appreciate it.
Yeah. I would love to have like some animations, or the sound effect with like drum, bomb dropping. So if you
You gotta
guys
make
have
my
learned some
head
things.
too big to get out of here. But I mean, but it's true, man. I mean, I'll go. It's the focus on the journey. It's about your growth, right? And you get to a point where, like, yeah, the money's cool, but like, there's more to it than that, right? If you go after your personal growth, you start to become addicted to it, and then you're like, this is cool, man. Maybe I can help a few people along the way, right? So, and that's where I think Eddie and I get along so well. He's definitely aligned with that, and that's really kind of how I ended up on this show with you guys, was because of our conversations. Because I know you guys are the same way as well.
And
No, I really love that. Go ahead, Eddie.
yeah, that's awesome. And you know, to me, it was in one of our earlier conversations, you asked me a question that, it took me a while to actually answer. And you asked me, when you invest, are you an investor, or are you an entrepreneur? So I kind of want to ask you, Stephen, kind of flip the switch on that, and I'm curious to hear your answer on that question.
The answer to my question, am I an investor or an entrepreneur? I'm an entrepreneur that invests. That's my answer. So, and I didn't start out that way. I didn't. I went into it thinking about investing and the idea of, oh man, I get some deals and it'll be, rainbows and unicorns. And it wasn't. But yeah, I focus first on being an entrepreneur, and then I have investment opportunities, investment vehicles. That's what I focus on.
Awesome. Um, so there was obviously that switch, right? You connected with these people that you know helped you get to that point in your career, in your journey, that, hey, this isn't just another property, this is an actual business. Can you tell us a little bit about some of those obstacles, or things that you had to learn the hard way in that transition from an investor to an entrepreneur that invests?
Yeah. Yeah, let me think about some good examples here. So when I was starting out, I was thinking more of it as an investor rather than an entrepreneur. I would sit down and I would underwrite a deal and I would look at how much money could I make as a GP on this deal. That was the first thing I looked at. And then I was like, well, how few people could I invite into this deal with me so that I can make all this money? And that was probably one of the most limiting beliefs that I could have had at that time. And it's very natural, at least I'll tell myself it's natural, but right, I mean, you want to do this and you want to make money. And so I had this mindset of I'm gonna do as much as I can by myself, right? I'm gonna invite as few people as I can into the deal. And then here's another mistake I made. If I go and find a deal, people are gonna be begging me to be a partner. Like all three of those are wrong. So like mistakes and setbacks there. And what I learned is the multifamily investing for sure is a team sport, right? What you have to do is focus, make a list of the different roles, right? So we'll go through some of those really quick, right? If you're in multifamily, you can underwrite deals, you can be boots on the ground, you can raise capital, you can have a resume, you can have a high net worth, you can have high liquidity, right? Those are all value pieces you can bring to the team. So like list those out. And then what you want to do is say, what are the things that I can do easily and well? What are the things I can't do? And the things that you can do the fastest, that's where you're going to focus your time. I didn't do that. I tried to do everything. The things you can do the fastest, that's where you're going to focus your time on. So make a list. Like, what are the different roles? What are the things we can do? Make a list. Find those things and focus on that. Anything else, anything that you can't do or you're not good at, find somebody to do it that is good at it. Or go hire somebody. When you're first getting started, it's not easy to hire, but you can hire VAs pretty economically, right? We can have another conversation on that someday. But that was a big learning curve for me, was thinking that I could do it by myself, right? You got to get into it. So you got to leverage other people. And then here's the second thing that happens if you do that. Those people will bring their own experiences to the table and they will move you much faster than if you try to do it yourself. So I definitely learned that. That was a big mistake for me. Don't try to do everything yourself. It's going to take you way too long. You might not get there if you do. It's going to take you really, really long. So you want to fast track, find the right people to connect with, focus on your strengths, bring that value to the table. Another thing that I didn't focus on, that, man, I wish I would have done this like day one out the gate, is I didn't focus on like building a personal brand, right? And that's kind of a tough one to build a personal brand, especially when you're getting started and you're moving into that space of being a general partner. You know, you got to go talk to these people and you're trying to raise money. Like, hey, give me some money. I've never done this before. I've only passively invested. You know, give me some money. I think it'll work. And so that one's tough. But building a personal brand, and you guys have probably heard this, you know, people want to invest with someone they know, like, and trust. And I was having this conversation with my friends the other day. You know, I have a couple of friends. We mastermind once a week. We put everything on the table and solve issues with the three of us rather than one of us. We try to solve problems a little bit faster. But one of the things we're talking about was personal brand versus company brand. And we named some names and said, hey, like, he said, name some people who are successful investors, right? You know, Grant Cardone, like, he's one. Well, what's the name of Grant Cardone's company? Does anybody know the name of Grant Cardone's company? But you know who Grant Cardone is, right? Grant Cardone has built a brand. So focus on your personal brand. It doesn't, and I don't care if you get it right to start with. Start doing something, right? Leverage social media. Start putting something out there on social media. Start building your brand. Who are you? What do you do? And how are you going to help other people? So I'd say those are probably the two biggest things. If I could go back and change, would be partner with other people very quickly, focus on the things that I'm good at, find people to fill those gaps for me, and then like double down on personal brand. And that, like I said, that one's a little bit tricky. You could probably use some help to figure that out. But people invest with you, not whatever business it is or whatever group it is. They're going to invest with someone they know, like, and trust. So just focus on your personal brand. Yeah, conquer those two things early, and I think that'll speed things up for you.
Is it okay to squeeze in a question here, or is it just for the hosts?
Go right ahead, Sydney.
Yes, you mentioned mindset, and I find that really fascinating. Um, what if you wanted to find out this works, what you just said works if you actually know what your limiting mindsets are. But what if you don't even know what they are in the first place? Do you have any thoughts on how to go about surfacing those so that they can come into your realm of consciousness so that you can actually then work on them? I feel like working on them is the easy part. Actually, even
Yeah.
discovering them, that's the hard part. Any thoughts on how to surface them?
That's a really good question, Cindy. I have a question for you. Do you meditate? Do you practice mindfulness?
Not as of recent. I used to do that. I definitely should do that again. But yes, that's a good point.
So I have learned, when you like do something scary. So Sydney, you came off camera, that's great. But if I said, Sydney, I need to do a presentation right now, the next 15 minutes to yours, I needed to present how to be a multifamily investor and be successful. How does that feel to you? A little bit
It's
scary if I said the
a
next
bit
15 minutes to
scary and
yours, everybody,
exciting at the
but
same time,
okay.
actually.
That feeling right there, that's the feeling that is your guiding light. That like I had to learn that like, ooh, that's scary. Ugh. That's where I need to spend time. That is where my growth opportunity is. Whenever I feel that like, oh, that's scary, that's where I put my time. That's where I focus. And that's where I spend my time meditating and being mindful, is going through those feelings. I actually, I do have a course I'm going to be launching end of February, early March. And so my first module is mindset. It's finding purpose and finding your why, and breaking through those limiting beliefs. So for me, I'll go back to, I have learned that that scary feeling, that is my compass. It says that's where you need to be. So rather than like, I'm not gonna go there, you got to lean into it, man. Like full on, get comfortable being uncomfortable. Um, and so that helps you break through limiting beliefs. You just have to learn to be more aware of it. Like mindfulness helps you be more aware of it. But another thing that helped me a lot was once I had a coach, and the coach was like pushing me, and I was like, I don't want to do this. I kept getting pushed. That's where I developed a lot of the mindset. That's where I was getting pushed through all of that. And then I became much more aware of it. So now what happens is, what is the next challenge? What is the next obstacle? And you'll start finding your limiting beliefs. So hopefully that helps. I would say learn to listen and reflect. 10 minutes of meditation, once you've done it, can change things for you very quickly. And so anybody who's on here, I mean, I recommend taking a few minutes every day, be mindful. And when you're scared, hang out in that spot for a while, learn what it is making you uncomfortable. And I think that'll prove very valuable for you as you go through more, down this path of being an entrepreneur.
Yeah, I love that idea. The conscious activity of actually exploring what are the things that make you uncomfortable and then
Mm.
leaning into that and
Yeah.
hopefully down the line taking action. Thanks for that.
Yes, absolutely. You're welcome.
That's awesome. Thank you, Sydney. It was a great question. So I know Gabriel and Michael, you guys have the questions, but right before that, Stephen, I just want to ask you. I mean, obviously, for our podcast, we're always talking about the ugly truth and good and the bad, right? I mean,
Mhm.
for you guys, you already have invested in 1,800 units in apartments. Can you share with us? Are there any like bad investments that you have made? Any mistakes, or even like the one that are losing money?
Yeah. I can be very real with you right now. So I've made passive investments that were good. I made passive investments that weren't so good. I had to do, you talk about leaning in, because I gotta be, transparent here. Last night we had an investor call where we have a deal with floating debt, and where we're at right now is to keep the deal healthy. We created a debt offering, right? So rather than doing a capital call, we turned it into, we're going to do create a new loan, right? Basically, we're turning it into preferred equity opportunity for the investors. We're giving them a 10% guarantee as soon as the bank is paid back, they get paid before the LP position, the GPs get paid last. And so talk about setbacks. Yeah, I mean, the deal that we have still, it is facing challenges. But to keep it healthy, we had to go last night. We had one of those calls last night. It is not easy. You will be faced with those challenges. And I'm going to double down on, if you have the right partners, all of your partners are going to step up. All of them. And all of us did. And we're putting another $500,000 into the deal just as a partnership group. So I mean, that's real world right there. So people getting into it, you need to be prepared. I mean, I think we're on the upside of the cycle, but just because you get a deal does not mean it's going to be successful. You will have to work at it, especially now. The last 10 years leading up to, the change in rates, everything was, really good. Prices kept going up pretty steadily on the value of deals. And then that drastically changed over the last couple of years. So are there challenges? Yeah, all the time, man, all the time. But it's part of the game. It's just part of how it is. And so I'll go back to you choose how to deal with it. And actually the investors, responded very well to that. We've got several commitments. We're, working things out with the bank right now. So in the end, everything's going to work out, but it's how you approach the situation. So does that, does that paint the picture of it is not rainbows and unicorns? Like, there are challenges. I mean, even right now.
Absolutely. That's a great way of painting it, Stephen. Thanks for sharing that and being real and transparent with us.
Absolutely.
Yeah, thanks, Steven. It's, for letting us kind of peek behind the curtain. Feel like on social media and everywhere, it's like kind of like what you mentioned. It's the rainbows and unicorns and
Right.
getting your first deal. You're gonna be a millionaire. So we have a couple questions here. Gabriel, feel free to come off mute and ask a question.
Hey, everybody. Stephen, thank you so much. I actually can't write fast enough because you've been giving some very great knowledge. I
They're
think
going to
one
share a
of my,
recording. Don't worry. You got the recording coming. You can.
well, yeah, when I write it too, I feel like I'm more with you. I'm more in the present with you.
Gotcha. I appreciate that.
But I appreciate that. One of the questions that I had was, how did you know when it was time for you to set up a system?
What if I told you I always knew, but I never acted on it? That's probably not the answer you're looking for. So here's, you will get to a point where you're very busy. I recommend, I recommend is it Gabrielle or Gabriella?
Gabrielle?
Gabrielle. I recommend that whatever it is you're working on, once you get it figured out, start documenting that system. Just start documenting it. And I give you an example. When it came to underwriting is pretty complex. Are you familiar with underwriting multifamily deals? Okay.
Yes.
It's pretty complex, and you can spend a lot of time in it, and you can go down a rabbit hole. And what I did is I broke my underwriting into 4 phases, and I created a whole checklist. So basically step 1, 2, 3, 4 in 4 phases. And the first deal is like just kind of a quick and dirty analysis, and you're just taking information from the OM, the offering memorandum. And you just put that in there. And does it meet the criteria? We'll go on to phase 2. And phase 2 is that's when you do like trust but verify. And now you're looking at the financials and the rent roll, right? So you start with the OM, and then you just make a checklist for that. And then you would go over to, in phase 2, you're going to look at the financials and the rent roll. And if that still passes your criteria, then I would go to phase 3. Phase 3 is going to be where you go get your quotes, and you're going to reach out to your insurance agent. You're going to reach out to tax protesters, depending on where you're at. And you might want to let your property management company know that you're thinking about something and you do a market survey. And then in stage 4 is you're showing up to the property, you're working with the broker, you're getting ready to submit offers. That's the 4 phases that we did. So I took the whole thing and I literally did step by step, check. I hired someone, And I said, let's go through this process. And I gave it to them, and they gave it back to me. We went through. But doing that right there, whatever process it is, my recommendation is, as soon as you have something that you can wash, rinse, and repeat, create a process. Because then what I was able to do is I was able to hire somebody. So now who does the first 2 phases of underwriting? Not me, it's my employee. And we also build a process for reaching out to brokers, right? So they're doing outreach to brokers, they're finding deals. Now they're coming to me and they're saying, hey, I got 4 deals I want to look at with you. And I know they've been vetted because of the criteria that we put in place. And by that time, it's like, cool, go ahead and get the quotes, let the property management company know. And if it passes, when we get the other quotes back, then we're going to do a property tour. So hopefully that helps. But I would say when you have a process that you're doing something, try to figure out how you can document that to start thinking about how you can replace yourself. Because if you're really going to grow in a business, you have to constantly be replacing yourself. That is the secret to growing a business. Replace yourself, and then replace yourself again, and then replace yourself again. That is how you're going to hire and grow and scale.
Wow. Thank you so much, Dave.
You're welcome.
Thank
You're
you.
welcome.
Thank you.
Great question. Great question. I see, Michael, you have a question. Good to see you, brother.
Hey Eddie, how are you? Thank you, Stephen, for coming out tonight. This has been super informational and super helpful.
Absolutely.
But my question is you put a lot of emphasis on a coach. So with so many people out there branding themselves, as you said earlier, branding themselves as coaches and whatnot, did you go through a couple coaches before you landed on the one you had? And also, how did the vetting process of finding a good coach, what did that look like for you?
Yeah, good questions. So the multifamily group that I joined came with a coach, but that was strictly for underwriting. And so this is not a pitch for that group. I've met people from lots of different groups, but the group that I joined originally was Brad Sumrock. And so there's courses there you can follow, and then you get a coach. Now with that, it's basically the coach is not, you underwrite a deal, you send it to them in email, they send you an email back, change this, and then maybe you'll get on a phone call with them. So there's not a whole lot of coaching there. How did I get introduced to a coach? One of my partners introduced me to the coach, and then it turned out that like 3 of the people that I'd worked with had used the same coach. So I think that went a long way. And what I really liked about it is the coach was a business coach, not necessarily a multifamily coach. Because another thing I've learned is, so now I'm of the mindset every year I try to learn something new, like something new that's going to help me grow a lot. And so this was that opportunity. Okay, let me add another skill set that's not just focused on multifamily, that's going to help me in my journey here. So the vetting process was more, I had a partner who said, I've been using this coach. He was seeing good results. I had a couple other people that work with him, and I said, what do you guys think? And they said, yeah, he's a great guy. So it was through a referral is how I found the coach.
Okay. Thank you. And so you basically found a coach that was from a different sector, and then you used them as a synergy to mesh and build your own thing.
That's how it worked out for me. Now, this coach had worked with a few other people in multifamily, but it wasn't just strictly in multifamily. And yeah, that's how it worked out for me. And that's where, I'll go back to, that's where I had a lot of the growth. And so one of the things we haven't talked about is, my background is in corporate America. And when I started with this company in corporate America, the company it's a Fortune 25 company right now. And when I started for them in about 10 years, they went from making $8 billion in revenue to $150 billion in revenue. So what is that, like? I don't know, 1500x? I don't know. So they were growing at a faster rate than Amazon, Walmart, Apple, like just moving crazy fast. So in the corporate world, what I was bouncing when I was getting into multifamily, I learned, what I saw was how to like really fast grow a company. Like lightning fast. Like, how do you go in 10 years from 8 billion to 150 billion dollars revenue? You can go and hire companies, but you can go buy companies, but you got to hire a lot of people. And then so with that, you have to create a ton of processes, tons of processes. Everything's documented, everything's scalable, because I was hiring 5 to 10 people a year at one point. It was just as fast as you can get people in the door, like you're hiring. You know, at one point I was responsible for about 50 people in my department. And so that's where I really learned you can't juggle everything. So anyways, I'm just folding that into talking about the synergy, like bringing in the different perspectives, like leverage your background where you can and it makes sense. Don't be afraid to leverage that while you're looking at it. But you know, going back to your question about finding the coach, it was through relationships is how I found that coach. And to be honest, I still work with him today.
Thank you, Stephen. You're amazing.
Yeah, absolutely.
Let's see, Irma. Omar, you have a question?
Hi, how are you? Thank you for sharing with us. I did have a question that caught my mind as soon as you started talking, was about, you said that you didn't do any kind of how, if anybody that started in 2023 into multifamily, it was tough. Well, but you know, like for myself and, you know, quite a few other people, we all did start in 23. So can you explain from 22 what happened in 23, why you haven't done any investments or in that for 23 in multifamily?
Yeah. So basically rewind a little bit and give you some history and some context into why 2023 sucked. Okay. Yeah, sure. So in the end of 2021, interest rates were at their lowest. And when I say interest rates, it was LIBOR at the time, and now it's SOFR. So there was a shift from LIBOR to SOFR at that moment in time. It was literally LIBOR was phasing out, SOFR was coming in at that time. We were coming out of the pandemic. There had been this huge capital infusion of the United States government into the market, trillions of dollars, right? So you had tons of money pushed into the economy, which basically devalued everything, which was a catalyst for runaway inflation. Inflation at that time, you know, probably in 2021, mid 2021, you know, they're targeting inflation of about 2% year over year. And it started to climb and climb and climb and climb. And so you had inflation climbing very fast because of all the money that was pumped in. And I'm not saying it was a wrong thing, right? I think it did a lot of good. It saved a lot of things, but all this capital came in, and people, if you looked at people's bank accounts, we can get reports, and we can see individual bank accounts, but you can get like industry reports from Berkadia or Marcus and Millichap, and people's savings account was the highest it had ever been in like decades, right? People had just tons of money, and expenses went up. So expenses were going up very quickly. Inflation was going up very quickly. And then the government said, well, how do we stop this? Well, we're going to raise interest rates. And they did it the fastest they've ever done it in history. So when the end of 2021, beginning of 2022, SOFR was about half a percent. And then it got up to, I think it's like 5.5% right now. So just crazy inflation. And now, okay, so that's the economic standpoint. Questions on that before I jump into how that affects multifamily?
Yes. Yeah,
You're
I mean,
good with-
I'm in the residential side of lending, so I did
Okay.
see that part,
Okay.
but I
All right.
like as far as like new investments and understanding, you know, looking at you know, where pricing is now, I get that
Yeah.
part. Just, you know,
Okay.
just your personal part on, because I mean, there is still people, you know, there was deals closing in 23 and just more like what was
Yeah.
your
So there are
perspective?
definitely still deals closing in 2023. What happened is when interest rates went up, it made borrowing money more expensive. Okay. So then my debt went up. And then when I go to make an offer on a deal, the cash flow and returns are less because I'm paying so much more in interest. Okay. So what happened is anybody that was an owner, myself included, was like, I can't sell a deal right now because if you guys are familiar with cap rates have gone up, right? So I can't, even if I bought a property 2 years ago and the net operating income has increased, cap rates have gone up so much, and the cost of debt has gone up so much, I'm going to lose money if I sell my property. So anybody, I shouldn't say anybody, but people, owners were dealing with rapidly raising interest rates, and most deals, 99% of the deals were bought on variable rate debt. So because of the variable rate debt, everybody had to pay more and more and more. So your NOI was shrinking and your cap rate was going up, which means if you sold your property, you have to sell it for a loss. So deals that were there, people didn't want to come down all the way. So it was kind of a stalemate between sellers and buyers. And now we're kind of to that tipping point where sellers are just to that, I'm so stressed out, I have to do something. And that's where the real opportunities are. And that's where I think the next 2 years are going to be, if you can get into deals now, make sure you underwrite them and make sure they make sense. But if you can get into deals now and you can hold them for 3 to 5 years, I think you're going to be in a good spot. So the short answer there is property values went down and the cost to buy properties went up. And so there's just, it didn't make a lot of sense for the returns that we look for our investors.
Okay, thank you.
Additional questions on that?
No, I think I understand.
Okay.
I just wanted to know your opinion on your side, and, you know, it's
Yeah,
your group of investors that are, you know, that were like, okay, let's wait a little while.
yeah. So the returns for our investors weren't strong enough for them to want to invest. So if we can't raise capital to invest in a deal, we're not going to get into a deal. That's how it kind of how it worked out.
Thank you.
Great question, Irma. Well, I think we're about to wrap it up here on top of the hour. And so Stephen, we really appreciate for your time here, spending with us tonight. And just to kind of wrap up before we do that, what would you think is the top 3 things that you would recommend to anybody who's listening to this podcast? How do you move forward in 2024?
So number 1 is join my coaching program. And Michael, that's for you. Join my coaching program. For what are the top 3 things for people to do in 2024? Challenge yourself. Have some growth mindset. Find some partners that you can work with. Find some people that you can work with that they complete you. As cliche as that sounds, like, focus on, learn what it is you can focus on, and do that well. Find people to, do the rest, partner with you. And then quit thinking like an investor, start thinking like an entrepreneur. Think about, what is the revenue going to be like for me? Think about, what are my marketing strategies going to be? How can I turn this more into a business? Because that's what we all want, right? We want that ability to have a business, not a job. And if you're not careful as an investor in multifamily, you very easily could have a very expensive job. So the sooner you change that, I think the sooner you'll get there. Those are my top 3.
Awesome. And while I pull this up, Stephen, can you talk about what's next on your journey, or what do you have coming next for everyone?
Yeah. So, I did mention, halfway joking, Michael, join my coaching program. So like I mentioned, I actually am launching a coaching program to help people out. And there's a lot of people out there that have coaching programs. Where I think mine's different is where those gaps. It's easy to join these multifamily programs and just talk multifamily. But what they don't teach you is like really the business side. What is the mindset? What are the habits that you should implement as an entrepreneur? When is the time to start creating documentation, standard operating procedures? How do I go about hiring somebody? How do I train somebody? How do I keep somebody engaged? And then, even, how do you handle social media? How do you start building your personal brand? And that's what I really want to help people with. Those are the things that were like, just really move the needle for me. And that's where I'm offering people the opportunity to spend some time with me, as well as an online course that I've created for people if they want to take that as well.
Steven, thank you so much
Oh, yes.
for joining us. I'm sharing here. Steven has a free webinar next week, here the 7th, and I can't believe it's already the end of January. But next week, feel free to scan the QR code. Steven, thank you again for joining us and giving us a different perspective of multifamily. I feel like, you know, a lot of the conversations, you called them out, have been around how many doors do you have, you know, how long have you been investing, but we don't get into the business side of everything. So, you know, thank you again for allowing us to pick your brain and for sharing all the knowledge that you've have acquired.
Yeah, absolutely. So I do have the webinar I'm having next Wednesday. We'll take some of these topics. We'll go a little bit deeper. My program isn't quite ready to be online. End of December, I was doing the recordings for that. So during that webinar, I will have available a link to join the waitlist for anybody who's interested in that. Or I don't mind, I can put my email in the chat right now, or if you guys want to send that information out in the recording, you're more than welcome to do that as well.